Good afternoon, everybody. Welcome to Tech Talk here at MarketStream.live. My name is Joe Cusick from the Cusick Group, securities offered by MoneyBlock. Let's take a look at the markets, and specifically I want to take two of the major market indices that are part of my core portfolio, and then I want to take a look at two stocks that are going to have earnings on Monday. Now, taking a look at two underlyings that are in my core portfolio, I'm going to take a look at the S&Ps and the Russell 2000. As far as the S&Ps, if you don't have access to the futures, take a look at the spiders. SPY is the ticker symbol, trading at 229.42, up $1.65 today. Now that's up about 0.7%. Beautiful move today to the upside if you're a bull. It's tough if you're a bear. But what are the options telling you? Well, for the next 5 days, it's telling you that this stock is going to be in this type of range, about up or down about $1.71. That's what it's pricing in. It moved that amount today. Up 0.7%. It's pricing in 0.7% next week as well. As a matter of fact, looking over the next 12 days, going into the expiration cycle, you're looking at a $3.12 move being priced in. So you're basically seeing about a 1.5% move being priced into the spiders. Now, with this being my core portfolio, at this juncture, while the market's been moving to the upside, I'm hesitant about adding to my position right now. As a matter of fact, if I'm going to start adding to my position, I want to see 227 challenged, specifically 227.80. If that's challenged, maybe even broken, that's where I'd start thinking about adding to a position that's pre-existing. If you're waiting to get into the market, which I have some clients that are doing, basically you're going to want to watch in the range between 227.80 and 225.32. Right in that area. That's going to be the sweet spot where you can start adding or building a new position in the S&Ps. 215 on the spiders is going to be long-term support. A break of 225 would mean that there's a definite trend shift in the markets. Then I would be pulling back and managing what I'm already long. In other words, writing some premium against what I already own, or I would be basically keeping my powder dry at that stage. Now, taking a look at the Russell 2000, again, if you don't have access to the futures or you're not trading the RUT, you can look at the IWM. That's the ETF that tracks the Russell 2000. It's trading at 136.67. It's up $1.86 or 1.38%. Now, again, this is one of my core holdings for the year. And for the next 7 days, I'm looking at a range of about $2.22. Now, it's moved to $1.86 already today. So for the next 7 days, we could be staying in this tight consolidation, especially if we're not going to get any momentum to the upside. In other words, another policy change, some sort of economic data that's going to catalyze the market to the upside even more. I have not added to this position, and for those that are new individuals coming into it, it's been a very difficult entry point, especially with the way the market's been just grinding up to the upside with really no rest. Taking a look at the next 14 days, I'm looking at a range of around $3.50. So there's still some upside into the next 14 days. A pullback is what I'm looking for, and specifically 135.20. That's going to be a very critical level. If it doesn't hold here, that means the Russell 2000, the small caps, domestically centric stocks that are going to be very sensitive to a lot of the Trump policies, especially since they're sounding more protectionist. If a drop below 135.20 on the IWM, that could mean that the short-term and mid-term bulls could be in a little bit of trouble. I wouldn't be adding to a position if there's a break there. I'd have to wait until I get down either to the mid to low 130s to see what's actually going on. If it goes down to those levels and holds, that's where I'm going to start adding to a position or building a new position if I'm just entering this market. 123 is long-term support on the IWM. Now, two stocks that are going to have earnings, and I think they're worth taking a look at because they're a little bit different as far as names that you would typically look at in spaces that have been moving very well to the upside. Specifically, taking a look at finance, I'm going to look at an exchange, the CBOE, Chicago Board Options Exchange. Now, this is an exchange that's fond of my heart. Spent a lot of years trading on that floor. It's trading at $70 and basically a penny. It's up about 0.1% or 8 cents. Now, over the next basically 3 days, or in other words, into Monday, I'm seeing the potential for this stock to move either up or down about $1.32. So it has some decent momentum. The reason why I'm saying $1.32 going into Monday, it has earnings. So there's a little bit of inflated premium in that front month. Stock trading at $78, moving 0.1% today, so not much in going into the weekend, but pricing in the potential for a $1.32 move. That's pretty decent size move. So we're going to keep an eye on that. Yes, it's only about little under 1.5%, but over the next 14 days, it's pricing in a $2.67 range over the next 14 days. So post earnings, there is some decent movement. Implied volatility rank in SIBO is at 24%. So I'm not seeing a heightened sense of violent moves going into the earnings. That's a barometer that I use to actually set expectations of whether or not I think the stock could move well outside of the range that I'm actually putting out in front of you. Critical level for bulls, 76.33. Critical level for bears, 76.33. Break there means that the short-term trend in SIBO could be under trouble. For those of you that might want to add this particular underlying to your portfolio, watch for in between the range of 76.33 and 74.42. Has to hold that range if the bulls are going to still have some traction to the upside. So we'll watch earnings. We'll take good note of those levels. Finally, I want to take a look at a transport. Trucks are the blood works of this United States, and YRCW, that's YRC Worldwide. This is a big trucking company trading at 54.24, up 49 cents today, or about 3.32%. Now, they're pricing in going into Monday's earnings the potential to move $1.79 either up or down. So we still have a pretty significant, over 11% range. And with the 49-cent move, you still have basically almost a 9% move being priced in going into Monday. Now, over the next 14 days, it's about $2.34. So you can clearly get your range at 117 and some change or 113 and some change. Implied volatility rank is at 37%. That's just telling me that there's not a heightened sense of huge violent moves either up or down. 1420 is going to be a critical level for the short-term bulls, and 1410 for the midterm bulls. A break of those levels is going to put into question both those trends. And if you're looking to add this underlying transport, YRCW, to your portfolio, especially if you're long, you're going to want to see it hold 1410 going into and post earnings. All right, folks, that's how I look at all of the technical analysis as well as the option analysis to give you better transparency into potential moves in stocks. That's going to help you in strategy selection as well as maintenance. Join me at 4:30 Eastern Time here at MarketStream.live. I'm going to wrap all the action up from this week. See you then.